All right, ladies and gentlemen, how is everybody doing today? On this wonderful Monday morning, it is August 10th, 9:02 now. We have an excellent presenter that's going to do some sharing for us today about the United American product. It's a Med Sup, primarily a Med Sup company, but they do have a lot of different things to offer. One of the main things that Michael's going to talk to you about is their products and also some lead generations. They have a few different programs that they have for agents available where you can get actually calling lists and T65 lists and different types of lists directly from them. They do have some programs that are free of cost. So Michael, United American, go ahead and give us a little training on what it's about, please.
Hi, thanks for the introduction, Emmanuel. Well, first of all, I want to thank everyone for about a half hour, 40 minutes of your time today. My main objective here is to make sure that everyone on the call gets some value out of it. So I want to give you a little bit of information to prepare you for your most successful AEP you've ever had. And the other thing I can help you out with, like Emmanuel mentioned, is lead support. So I have a number of different ways to help you out with leads. And my last objective here is I want to make this AEP the least stressful and the easiest AEP you've had. So I have a few things to help you out. Now, my name is Mike Serrano. I'm actually located here in California, so I can provide some local support as well. Below is my cell phone number and my direct email address. I would take that down now. But I truly believe that our lead support, especially our renewal structure, is what's going to separate us from all other carriers. And you'll see throughout the presentation today, we're the only company in America that pays the same first-year commission on a Medicare supplement sale and pays the same commission out every single year for as long as that business is on the books for your renewal. And it doesn't make a difference if you're appointed with us or not, whether you have a license or not, whether you're alive or not. It will go to your beneficiary. Today I'm going to focus on how to compete in the Medicare supplement marketplace. And like I mentioned, I want to make this the easiest and least stressful AEP you've had. I also am going to spend just a couple of moments on our ancillary products that we have, cancer plans, critical illness, things like that. I'm going to talk about the leads, and even more leads that we have to provide for you. Again, it doesn't cost you anything at all. Plus, I have some special incentives for everyone on the call today, especially for those of you that are not currently appointed with the company. And I'm going to show you how to get started and how you can get started today. First, I want you to understand how special your contract is. Now, even though you have this great partnership with Team Alvarez, what's nice is that your commission checks will come directly from United American Insurance Company, which is always a nice thing. And this is important because you own your renewals with United American Insurance Company. And this is important. You're vested 100% from day one, $1 with your commission's renewals. We pay lifetime renewals on all of our products, and that includes our final expense. Not to mention, we're the only company out there paying the same first-year commission every year on Medicare supplement sales for however long it's on the books. And like I mentioned just a moment ago, life of business with our company means life of business. So if you cancel your appointment for whatever reason down the road, or you let your insurance license go down the road, you're going to continue to get your renewals from United American. If you pass away, it goes to your beneficiary. Beneficiary doesn't need a license or any special test to keep your renewals coming in. This is also a general agency contract, a true general agency contract. So that means you can go out and you can build a team, or you can stay a personal producer. There's nothing wrong with that. But either way, you don't have any production requirements with us. And you're going to see a ton of lead support, training we provide, and all other kinds of benefits, and you're still not captive to our company. You can still go out and represent other carriers if you want to. You also get full access to our website for training support and things like that. Now, for those of you that aren't currently appointed with the company, Emmanuel should be sending out, or have someone in the office be sending you out contracting information. This is very quick and easy. The whole application to get appointed will take you less than 5 minutes to fill out. But you're going to have an email that should go right to your inbox, and it's going to be from GA Automation, or it's going to be from Agent Appointments. Now, if it's not in your inbox, make sure you check the spam or the junk mail folder. It does have a tendency to go out there. Basically, what happens is an email gets automatically generated from and gets sent out from our licensing department. There's several attachments and things like that. So again, not in your inbox, check the spam folder. I'm going to talk very briefly about the company. I just want to let you know we've been around a long time. We've been in business since 1947, and we've always been a leading writer of individual Medicare supplement insurance. And we were actually one of the carriers that helped the government develop the first Medicare supplement plans ever in 1965. We've been selling them ever since they were signing the law. So nobody out there can say they've been selling Med Sups longer than we have. We've also been A-plus rated for more than 35 consecutive years, and we're all over the country, all 50 states, including New York. In New York, we're known as First United American. They've also been A-plus rated for more than 25 consecutive years. We're efficient in what we do. We pride ourselves on our customer service. You can see we pay our Medicare supplement claims in under 3 calendar days. So that includes weekends and holidays and natural disasters. I mean, there's some big national carriers that brag about paying their claims in 10 business days. And we paid out a lot of claims last year. We paid out almost 4.4 million claims. And you can learn a lot about a company by looking at this type of information. And two things that really stand out to me, when you look at our total claim transactions and our non-Medicare supplement-related health transactions, there's only about 31,000 of those. That tells you our primary focus is the senior market with our Medicare supplement sales. The other thing that this tells you is that your client clearly is going to use a Medicare supplement more than any other product in their portfolio. That's why when you put Medicare supplement business with a carrier, you want to put it with a carrier that's going to take care of your clients. That's exactly what you'll get at United American. We took in over 930,000 phone calls last year. Every single one of these phone calls is answered by a live representative in our home office in McKinney, Texas. And over 98% of the time, those calls are answered within 20 seconds. And you and I both know, especially our senior clients, they'll really appreciate that good old-fashioned customer service. Now, I'm going to go through some Medicare Advantage basics very, very quickly, probably less than 2 minutes. I'm sure all of us are familiar, so I'm just going to go really just down to the facts. I'm not here to beat up or bash the MA plans, but I'm just going to go through what the plans are. Now, first thing we need to understand is why a client signs up for an Advantage plan over a supplement. And what I hear most of the time is because of the zero premium or lower premium, and sometimes they have additional benefits like silver sneakers, which is a gym membership and things like that. But with the Advantage plans, you also have things like a network. And the networks are getting more restrictive. They're not growing like they were when the plans first came out. They're not guaranteed renewable for life like a Medicare supplement plan is. Plus, they're documenting the network when they sign up for the plan, but they can choose to leave and opt out of those networks anytime that they want to. And I'll explain why that's happening as well. Not only that, the carrier can pull out. The bottom line and the point here is that the senior can lose coverage anytime throughout the calendar year with an Advantage plan. I think our seniors are looking for more stability than that today. Now, if the senior is canceled from an Advantage plan, they can come to any one of our Medicare supplement plans with guarantee issue rights. A lot of carriers will only offer a couple of select plans for this type of client. So you can see the plans that we offer here on the bottom left. The only plan we don't offer is Plan M as in Mary. So we got Plan N as in Nancy, we have Plan G, and I even have a special product that I think will really help you make the most out of your AEP that I'll talk about today. But first, let's go through why all these changes are happening with or at least in the Medicare Advantage marketplace. And understand that today, 30% of all Medicare beneficiaries are enrolled in Advantage plans. That means the other 70% have either just original Medicare, or the more likely option or scenario is that they have a Medicare supplement plan. And this right here, the Patient Protection Affordable Care Act, is why we're seeing, or at least it plays a big role in why we're seeing a lot of these changes in the Medicare Advantage plans. Written into this law, which is Obamacare or Covered California, there's $150 billion, and I said that with a B, like as in boy, $150 billion being defunded from Medicare. Now, most of this defunding is coming from the Medicare Advantage side of things. So that's why we're starting to see things like the network shrink. And the reason the networks are shrinking is because now the Advantage carriers have to go negotiate lower contract rates with doctors and hospitals. If the doctors and hospitals can't be profitable, they simply don't take the plan. It's as simple as that. And we're also starting to see these plans start to have premiums now. Those of us that have been doing this for a few years, we've seen the max out-of-pockets climb up quite a bit the last 7-8 years or so. But again, the point I'm making is that the Patient Protection and Affordable Care Act is playing a big role in why we're seeing these changes. This year, the payment cuts are scheduled to reduce by 5.9% to the Advantage carriers. So this is going on throughout several years. But we're seeing premiums on these Advantage plans anywhere from $35 to $75 per month now. I've seen some regional PPOs that were well over $100 per month. So, I mean, this is absolutely going on. Now, why are Med Sup's going to offer you the most growth? And let me talk about why you want to talk about United American Insurance Company this AEP. Now, we already know that there's 250,000 seniors turning 65 a year. But the beauty of Med Sups is that you can sell them all year round. For Medicare Advantage agents, they do the majority of their business from October through December during AEP. Now, what's great about our company is you don't have to get a scope of appointment to sell our products. You don't have to get written permission in advance to go sit down and talk to them about our Medicare supplement plan and sell them that plan. You can cold call and knock on doors when you're talking about our Medicare supplement plans. And then there's also no AHIP certifications required to sell our products. That's what you have to do with most of the Medicare Advantage companies. So again, we just make it much easier to do business with us. Now, why you want to sell a Medicare supplement, or why, in my opinion, it's a better option, is it's guaranteed renewable for life. So a Medicare supplement plan can never, ever be taken away from the client. And I'm going to go through this information quickly as well. I'm sure this is basic for most of you. For those of you that do need training on this, once you're appointed with our company, we have all kinds of training webinars in place. We run 8 of them a week that will go over this information for you much more thoroughly. So again, once you get a writer number, if you do need training on this, we have it available. I also do seminars too in California since I'm here locally. But with Med Sups, they can choose any doctor, any hospital, any specialist. This is a big deal. That means they can get treatment anywhere in the country as long as the facility takes original Medicare, which is something like over 98% of facilities out there. So if they take original Medicare, they have to take our Medicare supplement by law. Now, this is especially important when we bring up cancer. You know, City of Hope here in California, one of the best cancer treatment facilities in the state, they only take one plan from one carrier throughout the entire state. So if you have one, or you don't have that one plan from that one Medicare Advantage carrier, you have to pay out of pocket to go City of Hope. Whereas they take original Medicare, so they would have to take our supplement by law. There's also no networks, like we mentioned, so it doesn't matter what state they get it in, they're covered C from shining C. Now, I want to take a moment to motivate you financially to offer our products. Because remember, we're the only company out there that's paying the same first-year commission every single year for as long as the business is on the books. Most carriers pay you 6 years of level renewals on a Medicare supplement sale, and then they stop. Now, some will pay you for 10 years, or some will pay you for as long as you're appointed with them, but they cut your commissions in half after the first year. So, you know, it's the same money just spread throughout a longer time period. Again, we're the only company level for life. This is important because a 65-year-old male today, the average 65-year-old male, lives another 19 years, or to be 84 years old. The average 65-year-old female today lives to be 87 years old, or an additional 22 years. And I'm sure everyone on the call agrees. Many times you're going to have a partner that lives to be 90 or 95. So now we're talking about getting renewals for 25 or 30 years. That's level the entire time. So I want to go through an example. In this example, let's assume your client keeps the policy for 20 years. Now, let's say the commission you make is $500. And you have the option to put that $500 commission with Brand X or put it with United American. If you put it with Brand X, remember the client keeps it for 20 years in this example, you're going to get 6 years of level renewals, which would be $3,000, which isn't bad. But remember, we're talking about missing 14 years of renewals here. If you put the same commission, $500 commission with United American, and the client kept it for 20 years, we're talking about a $10,000 commission. So when I look at this slide, it basically tells me every time I have $500 worth of commissions and I don't put it with United American, it could cost me up to $7,000. That is huge. Look at it this way. Let's say you're new to Medicare supplements, or maybe you do a lot of Medicare Advantage. That's absolutely fine. But maybe you only do $50,000 in first-year commissions with our company. Well, let's say you stay consistent and you don't get any better or any worse, and you make that same $50,000 in just our Medicare supplement commissions for 10 years. At the end of 10 years, you'd be generating $500,000 in annual renewals with our company. Or how does this sound? You would be getting over $41,000 per month from United American Insurance Company. And you're going to get that for as long as your business stays on the books, because you are vested 100% from day one, dollar one, with your commissions and your renewals. Now, to be fair, you want to take out for your deaths and your lapses for your persistency, which should be very high with the company. I'm going to go through how extremely stable our rates are in just a few moments, and not to mention our top plan has been going down in premium. But I actually have a very large agency, national agency. They got an award for a 100% persistency rate for the business they wrote last year. And remember what life of business means for our company. Life of business means you're going to keep your renewals for as long as they are on the books. It does not matter if you are appointed or not. It does not matter if you have an insurance license or not. It does not matter if you are alive or not, because it will go to your beneficiary. Now, let's say you want to build a team, because it is a GA contract. Well, let's say you have 10 agents that you know, and you go out and appoint 10 agents. Well, if each agent made you only $5,000 in just United American's Medicare supplements and overrides, well, your team of 10 agents would make you $50,000 that year. If your team stayed consistent and did that for 10 years, well, your team would make you $500,000 in annual renewals. Not to mention, they probably wouldn't be doing too bad themselves. We're talking about over $41,000 per month. Now, for our company, United American Insurance Company, we offer 10 of the 11 standardized plans. So again, the only plan that we don't offer is Plan M as in Mary. Now, why sell United American's Medicare supplements? Well, number one, it's going to give you more long-term sustainability, because Medicare enrollments are projected to increase through 2020. Now, this is obviously going to create more opportunities for agents. Now, I'm talking about 64 million individuals expected to enroll in Medicare by the year 2020. So if that is not opportunity knocking at the door, I truly don't know what is. And you don't have to be a Medicare supplement expert in order to be able to offer Medicare supplements to your client. You really only need to learn two plans, because our top two selling Medicare supplement plans, which is Plan F and the HDF, these two plans, and this is just a slight variation of the regular F plan, but these two plans make up almost 95% of our sales. So just two plans. The other 8 plans that we do offer, they made up just a little over 5% of our sales. Now, Plan F, as in Frank, made up almost 32% of our sales last year. This is the most commonly sold Medicare supplement plan with most carriers. Our top selling plan, though, within our company, is the HDF. It's called F Plus in New York. This plan made up 63% of our sales last year, by far our top selling product. And this product is a great option for your client that's considering a Medicare Advantage plan. And then think about it. It's guaranteed renewable for life. You don't have to go rewrite the plan every year, 2 or 3 years. Your commission's going to be the same on it every single year for as long as it's on the books. Plus, not to mention, you'll probably get some referrals from this too. But first, let's go through Plan F. Plan F is the Cadillac plan, again, the most commonly sold plan with most companies. It's basically a zero deductible Medicare supplement plan. Again, this is what most agents sell with most carriers. But how do we save money on any type of insurance? Doesn't matter if it's our health insurance, our auto insurance, or homeowners. But it's very simple. If we raise our deductible, we're going to save premium dollars, and we're going to put cash directly into our pockets. So how does the HDF compare to the regular F plan? Well, if you look at our side-by-side chart, you can see that it basically looks like the plan is identical. It works exactly the same, right? That's because this plan is exactly the same as the regular F plan. There's one small difference. The HDF has a maximum out-of-pocket per calendar year of only $2,180. Only $2,180 max out-of-pocket on this plan. It should be called the low deductible plan F, and really the word deductible is confusing because Medicare always pays their portion first. So it's extremely difficult for someone to hit the max out-of-pocket on this plan. And we have all kinds of marketing pieces available once you get a writer number with our company, which you get a writer number usually a day or two after you complete your online application. But this is our beautiful Part A and Part B chart. And you can use this to help explain to your client how the original parts of Medicare work, A and B. So you can see that Part A, and you can just read from it. Part A is the client's hospital insurance, and it covers costs associated with confinement in a hospital or skilled nursing facility. And then you just read from it, Mr. and Mrs. Client, if you're hospitalized between 1 and 60 days, you're responsible for a deductible of $1,260. Medicare Part A will pick up the rest of the approved charges for that hospital confinement. Read through the rest of the benefits. Flip it over and explain what Medicare Part B is. And Medicare Part B is the medical insurance. It covers their physician services, that's their doctors, outpatient care, tests, and supplies. And then same thing, you just read through it with the client. Mr. and Mrs. Client, Medicare Part B has an annual deductible of $147. Once you pay that out of pocket, Medicare Part B will cover 80% of all of these approved charges. That means that you're going to be responsible for a 20% co-payment, basically. Read through the rest of the payments, or benefits, sorry. Now, I ask everyone on the call, for your average client and most of your clients, do you think the majority of their claims are going to come from Medicare Part A, which is their hospitalization benefits, or do you think most claims for most people are going to come from Medicare Part B, which is their doctors, physician services, outpatient care? I'm sure everyone agrees. Most claims, most people, is from Medicare Part B. And this is exactly why it's so difficult to even hit the max out of pocket on this HDF. I could actually only come up with 5 ways where your client could mathematically hit the max out of pocket. And here are the only 5 basic scenarios I could come up with that would cause your client to hit the max out of pocket on this plan. The first way is that they spend the night in the hospital 2 different times, separated by 60 days or more. And then both hospital stays that are separated by 60 days or more have to occur in the same calendar year. So could that happen to your client? I guess it could. It's just not likely, especially with the advancements that we've made in modern medical treatments and technology and things like that. The second way a client could hit the max out of pocket is they would have to spend 64 consecutive days in a row in the same calendar year. I don't know anyone that I've met in my entire life who has spent 64 days in a row in the hospital. I'm not saying it can't happen. It's just not likely, in my opinion. The third way is your client could have a hospital stay of at least a minimum of 3 days, and then they would have to be discharged from the hospital. And then once they're discharged, they would have to enter a skilled nursing facility within 30 days. And then they have to stay in the skilled nursing facility for at least 27 days. Again, could that scenario happen? I guess it could. The fourth way is your client would have to have a combination of a hospital stay and then over $4,000 in Part B charges. Now, this would be the most common way your client would hit it. But again, this is still not a likely scenario by any means. The fifth way is a client doesn't have any hospital stays, but they would have to accumulate over $10,000 in Medicare Part B charges. Again, has to be in the same calendar year. So I would go over these 5 scenarios with the client, just like I have with everyone on the call today. And just like I'm about to ask everyone on the call today a question, I would ask the client the same question. So everyone on the call, I ask you, over a 10-year period, Using these 5 basic scenarios, how many times do you think your average client is actually going to hit the max out of pocket on this plan? And you probably said in your head once, twice, and a lot of times I hear 0. That's the most or those 3 answers are the most common answers you're going to hear out in the field. And then I save that answer and I use that as my ammunition to close the sale the same day. And I'll show you how to do that later today. First, let's make sure you fully understand how this Medicare or HDF plan works with Medicare Part B. Now, let's assume since it's August that the client's already paid the $147 Part B deductible. That $147 gets applied towards the $2,180 max out of pocket on the HDF. Now the client goes back and has a Part B claim. I don't know, maybe they have an X-ray or something, but it's negotiated to $100. Well, Medicare is going to step in and pay first. And they're going to pick up 80% of this $100 bill, meaning that clients left over with 20% or just a $20 copayment. Now, this $20 that the client pays out of pocket simply gets applied towards whatever's remaining from the max out of pocket on the plan. Now, in the unlikely event that your client does hit the max out of pocket, and I mean unlikely, this plan will turn into a regular Plan F, and everything else is covered 100% for the rest of the calendar year. Approved Medicare charges, of course. That's it. It's a regular F plan, and basically, the client is on the hook for the Medicare Part A and B deductibles up until the $2,180. And since most claims are from Part B, Part B is picking up 80%. Most clients don't hit it, and the rates have been going down on this product. The rates, and you heard me correctly, the rates have been going down. In 2010, our national average rate on the HDF for a male was $61 per month. For a female, it was $55 per month. We've had a rate decrease every single year since 2010. So today, the national average rate for a male is just $37 per month, and the national average rate for a female is just $32 per month. And look at how stable our company is. This is our average rate change from 2005 until 2014. So in the state of California, on our regular Plan F, over the last 10 years, we've gone up on average 1.27%. That is absolutely phenomenal. Now, what you don't see here is in the state of California, our F plan hasn't had a rate increase since 2010. So our clients are paying the exact same rate that they got in 2010 today in 2015. If you look at our HDF, on average, per year, from 2005 to 2014, it's gone down over 7% per year. I mean, that is absolutely phenomenal. How happy is your client going to be with you? Now, let's talk about how easy it is to sell this product. Now, if your client already has a Medicare supplement plan, this is a no-brain sale. It's very, very easy. And for your Advantage clients, you just want to go through the differences as far as the networks, the guaranteed renewable for life, and I'm going to show you something with the max out of pocket. It's just a few moments, so hang tight. But all you want to do is subtract what they're currently paying for their Medicare supplement plan. So the national average premium for a big national carrier, their national average F claim premium is $170 for a male, $155 for a female. Again, just subtract what our HDF premium is. That's all you want to do. So the husband is going to save $133 per month by switching to this plan. The wife's going to save $123. Now, all I want you to do is show your client what they save per year by switching to this plan. So the husband would save $1,596 every year on his Med Sup premium just by switching to this plan. The wife's going to save $1,476 per year. That means his family's going to save over $3,000 a year simply by switching to this plan. Ask your prospect if they would be interested in saving over $3,000 a year on their Medicare supplement premium. I bet you they say yes. And it just makes complete sense. You know, why would anyone pay $1,476 or more per year, because remember, the husband saves about $200 more or $100 more per month, to protect a potential, a not likely loss of $2,180. I mean, think about this for just a moment. If you bought your spouse a piece of jewelry that cost $2,180, and the warranty to protect that piece of jewelry was $1,476 every year you wanted that warranty, would anyone here on the call take that out? Absolutely not. It just doesn't make financial sense. And remember how I talked about a few slides ago about how difficult it is to hit the max out of pocket on the HDF? It really is. If your client's between 65 and 67, and this is our actual claim data from our clients that have an HDF, but if your client's between 65 and 67, 84% of that age group only spent about $534 on claims each year. If your client's between 68 and 72, 79% of that group only spends $655 a year on claims on average. What about this last one? Age 73 or older. Well, 72% of that age group spent $766 on average on claims each year. So I now ask you, and you should ask your client, depending on their age, why would you spend almost $1,500 a year to protect the average claim loss, remember, depending on their age, of $534, $655, or $766? Just doesn't make sense. And once you're appointed with a company, if you're not already, we have all kinds of marketing pieces that help you when you're in the field. We have this flyer that you can bring with you that shows and demonstrates how claims paid out, what the average age group pays out in claims, and really you can work the premium savings right from this worksheet. We even made it into a door hanger for you. Now, we do a couple things that are very special with our HDF. The first thing is that we apply a $500 credit for any HDF with a July 1st, 2015 effective date or later. So basically any HDF you write now until the end of the year. The most the client can be out of pocket is $1,680. So again, this is another perk with our company. We're the only company I know of that does this, and I can't promise that this will happen, but usually every October we bump this up to $1,000. So again, I can't guarantee this, but usually October 1st and the rest of the year, the most the client can be out of pocket is $1,180. The other thing that we do with the HDF that's special is that we came out, and we just recently got this approved a few months back, but we gave the client on their second policy anniversary a one-time opportunity to upgrade to a full regular F plan if they want to, with guarantee issue rights. And we'll pay you the commission on the increase in premium, which is a nice thing. So remember that as well. Now, this is also exclusive to our company. I don't know of any other carriers that have something like this, but we call it a reserve fund annuity. And it's not an annuity as you know it. It can only be sold with our Med Sup plans that are listed here. It was designed for the HDF. But what it does, it gives your client a guaranteed 3% interest on the money they put in. Now, they can start it with as little as $50 per month, or they can put up to $5,000 a year into it, $70,000 a lifetime max. And the two best parts of this product is, number one, it pays their claims for them automatically if they want to. So their HDF, essentially, with the reserve fund annuity, will work like a regular F plan. And the very best part is they can pull their money out whenever they want, any reason that they want, 100% penalty-free. Now let's do a quick comparison on the max out-of-pockets with Medicare Advantage plans and what the max out-of-pocket has been on the high-deductible Plan F, or the HDF. Now, you can see that in 2011 to 2013, it stayed pretty stable, right around $4,300. This is the average Medicare Advantage plan. 2014, it bumped up to $4,882. This year, it went up again to over $5,000. Let's break it down by the different selections of plans. So you can see here the green, that means that the max out of pocket was $2,500 or less in 2011. 46% of the plans with the blue is between $2,500 and $3,400. The yellow is $3,400 to $5,000. The orange, or whatever color you want to call this, is $5,000 to $6,700. So again, until 2013, they stayed pretty stable. I mean, close to the same. But look what happened in 2014. The plans that had a max out of pocket between $5,000 and $6,700 skyrocketed. They're now almost 50% of the plans, 46%, now have a max out of pocket between $5,000 and $6,700. And now only 3% of the plans have $2,500 or less. And again, why these changes are happening. Remember when I talked about the Patient Protection Affordable Care Act, or Obamacare, and all that defunding for Medicare? That is playing a big role in why we're seeing these changes. Let's break it down by HMOs, local PPOs, and regional PPOs. Now, the HMOs, it's the same thing. From 2011 to 2013, everything stayed about the same. Right? 2014 is when we see the increase. The HMOs, 38%, or now today, 39% of the plans have a max out of pocket between $5,000 and $6,700. The PPOs, the local PPOs, 53% of them now have a max out of pocket between $5,000 and $6,700. And the regional PPOs, and today in 2015, 99% of them have a max out of pocket between $5,000 and $6,700. Not to mention, most of the regional PPOs that I'm seeing today also have a premium. So all in all, on average, today, the average out of pocket is about $4,300. 30% of the plans between $3,400 and $5,000. Another 24% of the plans, we're talking HMOs here, between $5,000 and $6,700. Let's look at the HDF. This plan first came out in 2005. And you might have asked yourself throughout the call, well, Mike, can the max out of pocket go up on the HDF? It can, but it's voted on and it takes an act of Congress. They vote on this every October, I think it is. But if they do decide to raise it, it can't go higher than what the CPI is, which is usually around 3%. But basically, long story short here, over the last 11 years, it's gone up about $400, or about actually less than $40 per year. So this is very stable for your client. Don't you think our clients can handle about a $40 per year increase in the max out of pocket? Absolutely. Their premiums have been going down on this. Not to mention that they don't have any networks. Again, it's guaranteed renewable for life. They can get the best treatment that's available to them anywhere in the country versus the best treatment that's available within their networks. And like we talked about, you don't need to have a scope of appointment to sell our products. You don't have to get written permission in advance when you're talking about our Medicare supplements. Plus, we don't require any AHIP certifications. You have no production requirements. And what's nice is you can sell our products all year round. Anyone that has a Medicare supplement can replace it whenever they want, assuming they qualify health-wise. And in California, we have the birthday rule, which is a nice thing. Now, the premium savings example. This is how I close the HDF sale if I'm converting them from a regular F plan. But basically, all you want to do is show them what they save per year, and then you want to show them what they'll save over a 20-year period. So someone coming off a regular F plan, a husband, a male, is going to save over $31,900, and a female would save over $29,500, meaning that this couple would save over $61,000 the next 20 years simply by switching to this plan. So after I show them this is where I bring up those 5 basic scenarios that we talked about earlier. And I'll say something like, Mr. Client, earlier you mentioned that if you were at the max out of pocket on this plan, using those 5 scenarios we covered, you'd only hit it once or twice over a 10-year period. Let's assume that you hit this 4 times each over the next 20 years. That means you spent less than $20,000 out of your own pocket. You would still be ahead of the game of over $40,000. Would you be interested in saving $40,000 the next 20 years? You are? Great. Pull out your application and you start asking health questions and you just assume the sale. It's as simple as that. I'm going to fly through our additional products that we have, but we do have other products available. Cancer plans, critical illness, final expense, things like that. Why do you want to sell cancer coverage? Well, 50% of men will develop cancer throughout their lifetime. Women, a little over 33% will get cancer throughout their lifetime. This year alone, over 1.6 million will get diagnosed with cancer. But how our plans work is that it's cash paid directly to the client. They can use it any way they want. Your built-in lead database is all of your existing and your past customers. It's a very simple policy. How it works is like this. They choose a benefit amount between $10,000 and $50,000. When they're diagnosed, not laid up in the hospital, don't have to have surgeries, just diagnosed with cancer, they'll get that lump sum benefit between $10,000 and $50,000. Here in California, you can sell this up to age 64. If you sell this to them at age 64, they can keep it until they're diagnosed or stop paying. We pay lifetime renewals on all of our products, including these. We pay high first-year commissions. It's a simple yes/no application. There's 3 health questions on this app. We don't even ask if they use tobacco or not. Critical illness, there's over 700,000 that have a heart attack every year in this country, 800,000 that have a stroke. In 2012, there was over 114,000 that were diagnosed with end-stage renal disease. So just like our cash cancer plan, we have a product that will pay cash directly to your clients, and you have the built-in lead database, existing and past customers. Now, how this product works is that they have the same benefit amount options. They pick between $10,000 and $50,000, but they have a major organ transplant, a stroke, heart attack, total loss of hearing, total loss of eyesight, or end-stage renal failure. They'll get the lump sum benefits. Issue ages are 18 to 64. Of course, high first-year commissions, renewals for life. We have a great final expense product. This is brand new. We just came out with this a few months back. But we do face amounts between $1,000 and $25,000. Issue ages are 50 to 80. We are competitive with this product as far as premiums go. We include terminal illness, accelerated benefit riders at no cost to the client. All that means is that they're diagnosed with a terminal condition, we'll give them part of their face amount while they're alive. It's a simplified issue. So there's no physical exams, there's no parameds or anything like that. It's just a 7 yes/no application. They have 7 yes/no health questions on it. That's all. If they don't qualify for the standard plan, they'll most likely get a graded plan. Now, final expenses is a very easy product to add on or cross-sell, especially if you convert someone off a regular F plan. If you convert or sell someone an HDF from the regular F plan, all you want to say is something like, Mr. and Mrs. Client, would you object to the $90, or would you object to setting aside $90 out of the over $250 per month I'm saving you to make sure you can have some of your burial needs taken care of? If they say no, sell them the $90 worth of final expense. The husband, in this example, we sold him a $50 a month burial plan, sold the wife a $40 a month burial plan. That means they would both still save $82 per month or close to $1,000 per year. So you can set your client up with great coverage with the HDF, get them a final expense plan, still save them over almost $2,000 a year. Now, for the free leads we provide, these are absolutely no cost. You have to be appointed with the United American Insurance Company through Team Alvarez, though. But once you do that, if you haven't done so already, if you're already appointed, we're going to set you up with the Turn in 65 list. We have new agent incentives for you. You're going to have basically 30 days, assuming you fill out your online application today, to sell 2 of our products, and I have a very nice incentive worth over $400 for you. Plus, we have ongoing monthly incentives and introductory offers. So your Turn in 65 list. Now, Turn in 65 is the best time to sell because they're going to be guarantee issue. You don't have to worry about their health conditions. And what's nice about this Turn in 65 list is it's 6 months before your client turns 65. We will let you sell your client a Med Sup plan 6 months prior to this Turn in 65 time period, or when they enroll in Medicare Part B, and pay the commission up front on it as well. Most carriers don't let you do that until it's 3 months out. So this is a big advantage for our agents. But the idea is for that extra 3 months is to be the first and earn that client's business for the rest of their life. Now, once you're appointed, we have the pre-approach letters already approved and compliant for you. Plus, we have happy birthday return cards. This is an example of the happy birthday letter and return card. This actually offers a $3,000 accidental death plan at no cost. Now, the incentive I have that's worth $435 that we're going to pay for, assuming you do 2 easy things. The first thing you have to do is return your online application to Team Alvarez today. It takes less than 5 minutes, so there's no reason that you can't have the time to get this done today. The second thing you have to do, assuming you take the less than 5 minutes to return your online application today, is you just have to sell 2 of our standard Med Sup plans within 30 days. They have to be issued as well. So sell and issue 2 of our standard Med Sup plans within 30 days. So even if you sell 2 of our HDF programs to your clients within your first 30 days, that will get you a 1,000-piece direct lead mailer. We get a 3% return nationwide, about 2.4% here in California. So that would get you 24 hot exclusive leads here to work in the state of California. How much of a great start would that give you, having that 1,000-piece direct lead mailer going in the AEP? You do not want to miss out on this. Plus, outside, if you are already appointed with us, we have an incentive for those agents as well. So if you've been appointed for at least 30 days, if you have a $10,000 annual premium increase outside your best month, so if you got appointed last month, you didn't write anything, if you write $10,000 in annual premium this month, we'll pay for you to do a 1,000-piece direct lead mailer. We're only talking about 4 or 5 F plans, depending on what part of California you're in, tobacco use, age, and things like that. If you have a $20,000 premium increase, we'll pay for a 2,000-piece direct mailer. Now, I have introductory offers. These don't cost your client anything. They're free. This is a MedFax kit, a memorial guide, which is just for the client to let their loved ones know how they want their final wishes and requests for when they pass. My favorite is the accidental death plan. This is free. You can give this away to anyone you bump into between the ages of 18 and 68. It will put $3,000 of coverage on both the insured and spouse, $1,000 on the kids. Now, once you're appointed, I know I went through a lot of information quickly today, but once you're appointed, you get access to our free online training, which goes through all this information much more slowly. Plus, we have our preview advertising and things like that. So our weekly training, remember, we run 8 different training webinars a week. So on Fridays on the West Coast, and really it's Tuesday through Friday, our training's from 8:30 to 9:30 in the morning. We'll train you how to order supplies, submit new business, access all of our sales tools, and introduce you to our ancillary products more thoroughly. Product training, actual product training, and sales training, how to sell products. So once you get a writer number with us, that's when you can take advantage of it. So you can see 8:30 a.m. and 1 o'clock in the afternoon on Wednesdays, and then on Fridays we do it 1 o'clock in the afternoon. We'll do it on Med Sups. We have it for final expense life insurance and cancer products, as well as general sales training, setting appointments and things like that. If you want to use our e-app, you just have to be appointed and reach out to Dave Oliver. Here's his phone number. Here's his email. He'll get you going. But basically, all you need to do is look at the time zone, Pacific, look at the day, and these are the times that we run our webinar. This is how we teach you how to use it. You take a quick 3-question quiz or so after, and that's all. Annual convention. These numbers are prorated, so basically cut these numbers in half. If you qualify, you'll come to the Hyatt Ziva in Los Cabos, Mexico with us next year. So if you have an agency, you only have to write $175,000 if you get appointed today from now until the end of the year. Write an agent, personal producer, $75,000 in annual premium from now until the end of the year. Absolutely obtainable. We don't require E&O insurance in order for you to get appointed. And you heard me correctly. We don't require it in order to get appointed. I'm not saying you shouldn't have it, but it's not a requirement. But it's basically $38 a month once you are appointed with us. If you want our discount group rates, if you're shopping around, if you have it, you have it. You're all set. But I'm going to do a quick recap, and then that's it. I apologize. I went a few minutes over more than I wanted to, but I did have a lot to go through. But remember, even with your partnership through Team Alvarez, your commissions are still going to be paid directly by United American. And remember your renewals and your vesting. You're vested 100% from day one, dollar one, and you're paid for life of business. Remember, we're the only company out there that pays the same first-year commission every year for as long as the business is on the books. And again, if you cancel your appointment with us, you still get your renewals. You cancel your insurance license for whatever reason down the road, you still get your renewals. You pass away, your beneficiary gets your renewals. No AHIP certifications for our company, our products. No scope of appointments, our company, our products. You also don't have any production requirements. You're not captive, and you still get all this tremendous support from us, especially with our website, our training, and things like that. Here's some contacts. Honestly, I'm not going to have time for you to write all these down. But once you're appointed, or if you want someone to reach out to, if you are appointed and you need help, just shoot me an email. or shoot me a text message. That's going to be the best way to get a hold of me today. I'm traveling up to Sacramento after this webinar. But Dave Oliver, I have his phone number, and I also have directors of our life division as well. Now, remember, Team Alvarez, either Emmanuel or someone there in the contracting department, should have sent you your online application to get you started with our company if you haven't done so already. Do this now so you can get familiar with our company. It only takes, like I said, less than 5 minutes. It's all done online, and it should be in your inbox already. It's going to be from GA Automation. Sometimes it says agent appointments or agent automation, so check that as well. And if it's not in your inbox, make sure you check that spam or junk mail folder. But it's all done through this email. It's very quick and easy to submit. Here is my phone number, my direct cell phone number. So please, if you have any questions, don't hesitate to reach out to me. I'm here to help. You just got to let me know how. That's my direct email address. But with that being said, I'm all wrapped up. So Emmanuel, I don't know if you're still there, but I'm sorry I went a few minutes over today, bud. Is there any questions I can answer or anything like that?
If people have any questions, please use the chat box that's located on top on your tool, and you can go ahead and type in a question and we can get it answered. Also, if you can do me a favor and type in your names into that chat box, that way we can keep a record of who attended today. Mike, thank you very much for the information that you provided us. You definitely did share with us a lot about how they can use this product to generate leads and how they could use this product to generate lifetime income.
Beautiful. Yeah, and like Emmanuel said, if you have any questions, type them in that chat box. I'll be happy to answer them. Now's the time while you got me on the phone.
All right, guys, thank you very much for those of you who have already gone in there and putting your names into the chat box. That helps us keep a record. You know, Medicare is very highly regulated, and we need to keep records of the trainings that we provide. If you have any questions, go ahead and type in those questions into the chat box. Because a lot of times what happens is we unmute the lines, and then there's a lot of feedback, a lot of crazy noise going on in the background. All right, guys, we'll give it another minute or so. If no questions come in, then Mike, I guess we're done.
Sounds good. And then
Sacramento today?
What's that?
You're going to be driving up to Sacramento today?
Yeah, up that way. There's like a senior health fair going on out that way tomorrow, so I'll be going to that.
Cool.
But no, I want to thank everyone that's still on the call, and thanks for giving me some time today, Emmanuel. And like I said, if anyone has questions, feel free to give me a call. But take care, everyone, and have a good day.